Hello. Welcome to JKO News, where you get more facts and less opinions. This is the Week in Review, from the 6th to the 10th of February 2023. The week started with terrible news. A massive, deadly earthquake struck southern Turkey on Monday. The 7.8 magnitude quake has killed thousands of people in Turkey and neighboring Syria. It also triggered dozens of destructive aftershocks. Turkey sits in an earthquake hotspot. Three tectonic plates, the Arabian, Anatolian and African plates, meet in this region, and as they slide past and squeeze against each other, they build up friction and stress that gets released as earthquakes. The death toll is a result of several factors: the sheer size of the quake, the fact that it struck relatively close to the surface, and its proximity to where people live. Diplomatic sources told Reuters that European Union countries are working on a 10th package of sanctions against Russia. New sanctions should be ready around the anniversary of Russia's invasion of Ukraine, on February 24, and could include the limiting of the nuclear fuel cooperation with Moscow, banning imports of Russian diamonds and reducing trade with Kremlin's ally Belarus. EU officials are also seeking approval from the ministers for a seventh tranche of military aid for Ukraine worth €500 million. Russian Foreign Ministry spokesperson, Maria Zakharova, commented on the latest round of sanctions, stating that the current package will have the same effect as all the previous ones, that is, exacerbation of socio-economic problems in the European Union itself. Germany is considering rerouting existing subsidies for eliminating coal-fired power plants, to help defense manufacturers build new production facilities. The goal is to provide the country's armed forces with more weapons and ammunition and create jobs in regions that are affected by the shift away from coal. Germany's Bundeswehr has been suffering from outdated and partly dysfunctional equipment for years. Following Russia's invasion of Ukraine, the German government last year earmarked €100 billion in defense spending to expand and modernize its armed forces. Furthermore, in September 2022, we watched Germany turning to its most reliable and environmentally polluting fossil fuel. At least 20 coal-fired power plants nationwide were resurrected or extended past their closing dates to ensure Germany has enough energy to get through the winter. On last Saturday, the U.S. military shot down a suspected Chinese spy balloon, off the Carolina coast, after it traversed sensitive military sites across North America. The balloon was shot down over water, to avoid risk to people on the ground. China insisted the flyover was an accident involving a civilian aircraft and threatened repercussions. In its statement on Sunday, China's Ministry of Foreign Affairs said that China will resolutely uphold the relevant company's legitimate rights and interests, and at the same time reserving the right to take further actions in response. China criticized the U.S. for an obvious overreaction and a serious violation of international practice. The presence of the balloon in the skies above the U.S. this week dealt a severe blow to already strained U.S.-Chinese relations, that have been in a downward spiral for years. It prompted Secretary of State Antony Blinken to abruptly cancel a high-stakes Beijing trip aimed at easing tensions. Now, let's go for the economic indicators. The Reserve Bank of Australia raised the cash rate by 25 basis points, to 3.35% at its February meeting, matching market forecasts. Tuesday's move was the ninth rate hike since May last year, which brought borrowing costs to a level last seen in September 2012. The committee forecast Australia's GDP growth to average around 1% in 2023 and 2024, after expanding largely in 2022. The unemployment rate, in Canada, held steady at 5% in January of 2023, just shy of the record low 4.9% observed in June and July 2022. The number came below market forecasts of 5.1%, signaling that the Canadian labour market remains tight. An additional 153,000 people joined the labour force, boosting the participation rate to 65.7%. The British economy stalled, in the last quarter of 2022, following a downwardly revised 0.2% fall in the previous period. Figures came in line with market expectations. Exports declined 1%, while imports were up 1.5%. Figures also showed businesses were destocking their levels of inventories in the final quarter of the year. The level of quarterly GDP is now 0.8% below its pre-coronavirus level. Considering full 2022, the British economy expanded 4%, following a 7.6% increase in 2021. The trade deficit in the U.S. widened to $67.4 billion in December 2022, from $61 billion in November. Considering the full 2022, The U.S. trade deficit went up to a record high of $948.1 billion, equivalent to 3.7% of the GDP, as rising inflation, high energy prices and robust demand pushed imports to the highest level ever. The University of Michigan consumer sentiment for the U.S. jumped to a 13-month high of 66.4 in February of 2023. After 3 consecutive months of increases, sentiment is now 6% above a year ago. Meanwhile, inflation expectations for the year ahead went up to 4.2%, from 3.9%, while the 5-year outlook remains steady at 2.9%. Overall, high prices continue to weigh on consumers despite the recent moderation in inflation, and sentiment remains more than 22% below its historical average since 1978. Combined with concerns over rising unemployment on the horizon, consumers are poised to exercise greater caution with their spending in the months ahead. Now, a quick walk around the markets. WTI crude futures were trading above $79 per barrel, after Russia announced its plans to cut output by 500,000 barrels a day in March, 5% of total production. The unexpected move is a retaliation against the European ban on seaborne imports, and price caps for Russian oil products. China is set to rebound, and Saudi Arabia, the world's top exporter, raised crude prices for Asian markets. The U.S. benchmark is up almost 9% this week, due to concerns about tight global supplies. U.S. natural gas futures bottomed around $2.40 per million British thermal units, closing on their lowest level since December 2020. The warmer weather reduced consumption to below average, and domestic production remains strong. As a result, natural gas inventories have risen. U.S. natural gas prices are down by more than 30% from the beginning of 2023, and almost 80% from their August peak of $10. For the week, the Dow was up 0.2%, while the S&P 500 dropped 0.6%, and the Nasdaq 100 fell almost 1.8%, the worst week since December. On the corporate front, Lyft plunged 36% as its earnings result missed expectations, and following the announcement of price cuts. Expedia shares fell 8.5% after a disappointing quarterly report. Equities in London came under pressure on Friday, with the benchmark FTSE 100 pulling back from its record closing high, dragged by materials stocks. The British economy stalled in the last quarter of 2022, with living standards hammered by a surge in inflation and reflecting the impact of strikes. British retailer Ocado Group plunged more than 10% to be among the top losers. On the flip side, oil giants, BP and Shell, rallied roughly 3%. Swedish defense equipment maker Saab also reported a Q4 operating profit, while Zara owner Inditex has reached an agreement to raise salaries in its Spanish stores by an average of 20%. The yield on the U.S. 10-year Treasury note, seen as a proxy for global borrowing costs, topped 3.7%, a level not seen in more than a month. Investors are in the process of adjusting their portfolios for a higher terminal rate, in the range of 5 to 5.25%. Wall Street is betting on a rate cut later this year, while the Fed says they will stay the course. The U.S. yield curve remains inverted. Bitcoin traded at approximately $21,600 this Saturday, February 11th. Looking back, over the last 4 weeks, Bitcoin gained 15%. Over the last 12 months, its price fell by 48%. Gold weekend passed $1,860 an ounce on Friday, and was set to decline for the second straight week, weighed down by hawkish signals from Federal Reserve and stronger than expected U.S. jobs numbers. Spot silver rose back to above $22.40 per ounce, after touching $22.03 on Tuesday, its lowest level since early December. Recession concerns could pressure prices. Investors worry about low industrial demand for the metal, namely for goods with high electricity conduction needs. COMEX's open interest, in gold and silver, is low, indicating that they are oversold. Thus, downside in the gold price appears limited. Both the CFTC and Euronext, regulated futures exchanges in Western capital markets, are being attacked by a Russian-affiliated ransomware organization. Besides obtaining ransoms from Ion, Lockbit now possesses and possibly has continuing access to vital data which at any time they can attack or compromise. There can be little doubt that this represents intelligence valuable to the Russian government, particularly with respect to oil and gas contracts. We are approaching the time when a new phase of the Ukraine war could kick off, with tank numbers building up. Zelensky has been touring Europe with demands for yet more weaponry. At this time last year, Gold began a rapid rise to $2,070, and oil traded up from $85 to $120, when Russia attacked. Markets are ignoring that the conditions which led to commodity and energy prices soaring last February are in place to happen again. This time, will gold break out above its all-time highs? Opinion section. The bond markets are showing rising yields, in line with the central bank's monetary stance. The stock market optimism is being challenged, and the rally may be running out of steam. It is probably not the best time to go long, with your eyes closed, and praying for everything to go fine. Don't let the fear of missing out take control, as the new bull market is not yet in sight. Always keep an eye on your investments as geopolitical and macro outlooks are still grim. Good luck. Next week, in the U.S., the economic calendar will be dominated by the inflation rate, producer prices, retail sales, and several speeches by Fed officials. Also, CPI, retail sales, and labor data will be released in the UK. Have a nice week. The content of this video is for information and education purposes only. The viewer is advised to verify the information using the cited sources. If you enjoyed this video, don't forget to like and subscribe to this channel.